This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade action we saw on Thursday. We saw a bit of a choppy day in the grains with more pressure in the stock market. Here to try to make sense of everything with us, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you again, sir. And, you and I were talking a little bit off air real quick. Kind of just the same storylines, a bit of a choppy day in the ags, but that stock market under a lot of heavy pressure, Bryan, on Thursday.
Boy, yeah, what a week. So the stock market's again under pressure today. Big losses as we speak, down about 670. But the livestock market just fell off the edge of the table here in the last week and a half as well. And big dropout in beans. And a lot of it just is that strong acceleration of the dollar, even though it did flip over yesterday. Dollar gain since mid-September about 7%. Really, Jesse, if you take the price of beans and take $15 beans and multiply it by 93% or the inverse, you give up about a buck ish in beans, and that's what they did, and that's probably what a lot of these other markets did. But the grains or the livestock, a little bit different story there. The market perceptively looks at something like a stock market or a higher dollar as kind of a double whammy, and it went defensive really quick. And some of that might have been on news that China was, in hogs at least, releasing internal supplies of pork, obviously to maybe meet some food demand issues, keep prices down there. So the question is whether they actually will come in and buy U.S. Product much, or if their herd is on the size that they may not. And if it is on the size that they may not, well, then we should be seeing some robust export activity in the future in corn and beans.
Very, very true. Well, a lot of things to unpack. Staying in the livestock trend. Let's just start there and talk a little bit more about that. You were talking hogs a little bit. I saw this hog market kind of fall apart on Thursday after it was seeing some good strength. I wonder if that was maybe some squaring positions or maybe some traders nervous ahead of the quarterly hogs and pigs report, Bryan.
Yeah, the general expectation are you're going to get a hogs and pigs report that has a confirmation of a smaller herd, and should ultimately be supportive for prices. But we're also looking at prices trading where they were back in January. So we made a quick rundown here, very steep dropout, trading $88 over a week ago, now near $76. That's $12 down, just lickety split. And it really came on the heels, I think, of some very significant liquidation. I think the big picture on both cattle and hogs could be very friendly, but you kind of got to get through this almost crisis on world economic conditions, or at least the concern that almost daily of mounting news stories about worldwide recession and concerns with the war and concerns with relations with China. It's a finicky world out there, and the market just doesn't like it right now. The traders are pulling their wings in.
Well, and as well, this goes for cattle and hogs. Weekly export sales looked decent again. China is in there buying, but still, I think again back to your point, just this broader economic concern. One has to wonder what retail demand is going to look like as we get here later towards the holiday season. What are we going to see for export demand? Will it be sluggish in the protein sector? Again, I think a lot of what's happening cattle and hog wise is going to come back to what's happening on the macro side, Bryan.
It is, and I will continue to underscore that the market has a tendency to move very much on perception. So you have a price today, and then you have a perceived price in the future. And in between, until that final price is recognized, which would be the last trading day on a futures contract, there's going to be conjecture and speculation. And part of this whole speculation here is just uncertainty. There isn't that robust strength, and this sort of, hey, we're coming post-pandemic, demand is out there, people are scooping it up, they're back to work, housing looks good. It's kind of the opposite. It's like, well, people, yeah, the unemployment's low, but housing prices have gone up, unaffordable for many. Now you're following up with interest rates. You're going to slow everything down. Is inflation, is the gate open and the horse is running wild, and now you're trying to corral them on inflation when maybe that door could have been shut 6 months or a year prior to the Fed taking action. There's just a lot of hindsight and a lot of concern. But the bigger picture is, from my perspective, is if you just talk to the quote average consumer, they're seeing their savings go down, inflation go up. So that choosing the savings, they're seeing their investments, their retirements going down. They're kind of getting this double whammy right now. They're just cautious and careful, and they're not willing. It may even be as simple as they're not willing to speculate in the futures market. Just hold off and wait for things to get either much cheaper, or perhaps just stay out of the market for right now.
A lot of things to consider there. And I know with the dollar as well, you mentioned this a bit of a reversal on the chart Wednesday, but then kind of just we're still holding right up here around those at 112, 113, 114 level. I mean, one has to wonder if things keep running out of control, will the dollar go back and test that 120 range that we saw, a decade ago or so? I mean, there's so much tied into this dollar right now and its weight on the ag commodities, energies, etc., that it's almost fascinating to watch, but at the same time, it's a little bit painful to watch some days as well.
Well, it is for anybody who manufactures or produces something here in the U.S. that you'd like to have your foreign buyers be a consumer.
Mhm.
It's just more expensive for them, and it doesn't clear out our inventories. So that's a concern. Now, if you're a buyer of overseas products, and actually, it's if you're importing oil, oil's a little bit cheaper and the dollar rising here, but it's all kind of tied together in the sense of a consumer sentiment. The consumer just, this is just a continuous sort of add on to the whole uncertainty starting in 2020 with COVID. And now we're approaching 2023 and all this turmoil and things turned upside down. It doesn't help that you've got this war escalating either. That just concerns people. There were a lot of proponents who thought they knew a lot, that this thing would be over in a short period of time, and it seems to be getting just mirrored down more and more. We're sending more money over in the U.S., right, wrong, and different, whatever you believe, but it's still more money going to fight a war, and that's just going to, probably escalate the other side. So I'm not trying to make a statement here. It's just the reality of both sides seemingly, you know, putting everything into it right now.
Well, Brian, thinking on the supply side, I know on Friday, quarterly grain stock, small grain summary will be out. And looking at some of the pre report trade estimates, it looks like trade is expecting that, we'll see the soybean side, 27 million bushels higher than a year ago, I believe. And then corn, maybe roughly 90 million bushels above year ago levels. That was some numbers, figures that I saw. But thinking about these reports and looking at this picture, Brian, what are your thoughts on what this USDA report day on Friday could do? Throw that on top of end of the month, end of the quarter for some. Just feels like it's setting up for a lot of volatility one way or another.
It does. So really, the key is what the June stocks report showed. It showed probably a little bit more corn in farmers' hands than I would have suspected. I wouldn't be surprised if it shows a little less corn in farmers' hands or very thin numbers, because we are doing a lot of talking and not finding a lot of people get corn on hand, at least through the end of August. And it's hard to imagine that 1.497. That's the average estimate, 1,497,000,000. It's hard to imagine that number is going to probably change dramatically, but you never know on a stocks report. I'll point out that what was interesting is that the reason that there could be, the bearish traders may say surprise, was they say, well, just look what the USDA did here on the September supply and demand report. They dropped demand 250 million bushels. Um, I think they dropped demand 250 million bushels because, one, it's high price, and two, this is my view of it, but if they didn't, and you drop the yield to 172 and a half bushels an acre, you've probably got 750 corn on your table right now.
Mhm.
So I think they could kind of look out and say, well, you know, high prices will create a little bit less demand. Now we got to see if that's the case. Some might think we're kind of at an autonomous level of demand. Let me point out that one other thing too that makes me believe the stocks number might be a little on the shy side or less than the USDA is estimating. Is you look at the corn utilized or the just basically what was produced in ethanol in the last 2 weeks, really a big slowdown. And
Hmm.
there's some talk, well, it's maintenance and all that. Well, that's true, but I also think it's just um, there's just isn't the corn out there to fit the need. So you raise basis levels, you try and pull in corn, you try and get new corn harvested. I think a lot of plants just slow down because they don't have the inventory from last year, which tells us and reflects us that farmers didn't hang on to and hoard a bunch of this old crop corn. The price was too good to do that for too long in May and June. Then it rallied back here. I think they sold a lot of corn the summer months. There was a very ample opportunity to into deep June to sell corn at a very high premium.
Brian, thinking as well about the wheat market, I could maybe say that it feels to me the wheat market has been the most volatile of the grains here as of late, with the dollar and everything else that ties into wheat. Typically, looking at the USDA numbers coming up on Friday, looking at the wheat side of the equation, all wheat production estimate, sounds like the trade may be looking for about a 5 million bushel decline in that number. But I wonder your thoughts on this wheat market heading into the USDA reports and just how things are looking right now.
Well, they're looking volatile, as you said, but when you actually look at charts, wheat has a bottom in place, and then it's got an uptrend, and it's got actually what they call an inverted head and shoulder. What technical traders, or I would call it inverted head and shoulders formation. And given the strength of the rally in the dollar here in the especially as of late, the wheat market's actually hung together and is poised to do pretty well. So what would be driving that? Well, dry weather in the Southwest. Talking about wet weather now in Europe and Russia delaying winter wheat planting. Um, is the world ready to come to buy U.S. wheat? Maybe not yet. But remember, China suffered a drought in their wheat areas, so they probably don't have as much wheat on hand, or maybe need to import wheat, or will not use wheat for feed substitute. So the wheat market's hung in there pretty well. It's hard to draw any weather conclusions yet, but also if you look at that drought monitor map, it stays dry everything western United States and up into Canada. So I would say things are less than ideal, and the market's really trying to hold together pretty well. Um, you look at this, and it's still kind of, for me, all arrows point toward board price in Chicago wheat, $10 on old
Mhm.
and new crop. And it's not asking for the stars and the moon. That's just a typical correction, a big market trend that's down since the prices peaked earlier in the year. So I'm a little bit optimistic on the wheat market, that we can add some more value into the wheat price and push it back toward $10.
Brian, any thoughts? Just risk management in general here right now. Obviously, a lot of stuff kind of coming in and out of the markets. A lot of news headlines. Any thoughts in general on the risk management side for growers?
Yeah, again, we talk about this quite a bit. Complacency kills. It does pay dividends at times, but it's a strategy. So I wouldn't be overly complacent here. There's some really conflicting forces here. You got tight supply forces versus poor economic and recession talk and war things that just aren't healthy for price. So, as we look, let's say at corn, there's a little carry the corn market. Think about selling. If you're thinking about selling, if you think you got extra bushels, put the bird in hand mentality to work, and cover it with some kind of a call or bull call strat. That's a strategy where you buy a call and then sell all the money. They call it cheap and the cost of it up. But something along those lines. Before you jump into any one of those strategies, will make sure you have a really solid conversation with your advisor and what the risk is, the potentials. But I continue to think about the balance of it. Make sure you're balanced. Don't get caught off balance and have this thing run you over. The volatility is here. It's likely to stay. When a few stars align, it's going to move hard one way or the other, and then maybe correct from there. So my advice would be stay strategic, stay balanced, and keep a tight eye on things. Monitor it daily. Don't study it daily to no end, but monitor it, and then have good conversations with those in your success circle that can help you get to where you need to be.
Very true. Good stuff there, Brian. How about that dairy market? How's things looking there as we near the end of the month?
About the same. Volatile back and forth. Economic concerns keep the dairy industry, I'm going to say on edge. It's holding to $20, but that's about it. I got October at 21.94, but everything else, at least through the summer, has a 20 in front of it, but not a 21. So it's a very complacent market. $20 historically good price for milk, but not so good when you come from a year where it's 24, 25 for several months. So looking for some supportive demand. Tough to get overseas demand information, but we do a World Global Dairy Trade we pay attention to, and then Dairy Export Council and export sales are not announced with dairy. So we try to look at a lot of things, but the bigger picture concern is that we're just we're producing enough milk, and maybe the market doesn't need quite all of that in an economic downturn. On the other hand, we're not expanding this industry. Nothing that I can tell leads to us to believe there's any expansion. So even if demand can incrementally continue to move forward, you're going to see some positive changes in milk eventually.
Well, Bryan, great analysis and insight as always. And I know if producers need to have a conversation and want to talk to you a little bit more in depth, it's always good to give you guys a phone call, check you out online, et cetera, just to sit down and talk about an individual situation, isn't it, Bryan?
Yep, that's all. We build a house one brick at a time. Farmers do marketing one conversation at a time, one decision at a time. So it's just kind of the work of just getting it done and
Mhm.
sticking at it. Yep. So we're
Well,
we're there for you if you need us.
definitely. Bryan, how can folks get a hold of you?
First way is phone number 800 I'll repeat that 800 and then 334-9779. Or take a look at our website, totalfarmmarketing.com, or shoot me an email. And it's Bryan with a Y, Bryan at totalfarmmarketing.com.
Well, we always appreciate the time. Bryan, thanks so much for joining us once again here on Market Talk. Have a fantastic weekend, sir. We'll talk to you next week.
Jesse, thank you. Always a pleasure. And just, my wishes for everybody to stay as safe as they can out there. Accidents do happen, so let's not make them happen. Just be very careful.
Couldn't agree more. Hopefully, everyone's having a safe harvest. With that, Bryan Doherty at Total Farm Marketing joining us today here on Market Talk. That's going to do it for the show. I'm your host, Jesse Allen. Find us, markettalkag.com. Have a fantastic rest of your day.